Well, good morning, everyone. Welcome to my channel. Now, in front of us, we have the gold chart. Well, gold has been making some serious move in the recent past, and that is due to geopolitics. Yeah, the Trump factor also happened. Now, we'll be breaking down this chart and we'll be seeing what's happening right now. When can you take some serious trades on this? And what's up? Make some money. So, we're on the monthly time frame, and as you can see, gold has had an uptrend for quite a number of months. Yeah, this is quite, it's an uptrend. So, with that being said, you always want to go with the trend, and the trend is always your friend. So, last week we had this move up right here, and this is when the tariff war has been there for quite some time, yeah, and so that has led to this very huge move up. Most of this is attributed to the tariff war. Now, gold, as you know, most of you know it, or if you don't know, let me tell you, gold is a hedge. Whenever there is a risk on, risk off towards the market, gold acts as a hedge. Now, normally, gold and the DXY are negatively correlated, meaning whenever gold goes up, like this, DXY comes down, like this. So there are those who might ask, well, what is DXY? DXY, it's a basket index for 12 currencies against the mighty dollar. So as you can see, the DXY has been quite on a downtrend. So the gold has been trending up. Now, as I said earlier, this is due to quite so many factors as geopolitics, tariff wars, yeah, all that. So, let me clear out everything. Give me a moment. Trying to clear as fast as I can. Give me a sec. Now So it's a bit clear. So as you can see here, first we collected liquidity in this candle, and then we formed this channel right here. So during this channel, I had a position right here. When gold broke, this is a major zone right here. It surged up. There are very many factors that led to this. Which we will not get into all of them right about now. Now, as you can see, it surged out, broke the major level. It came in consolidated right about here. And then we had another surge. And then it consolidated. Sometime just about a bit here. Yeah, it consolidated all over here. And then when we broke out, gold shot up. So mostly all this was due to the tariff wars, yeah, the Trump factor. But there are many other factors like, let me see for something. There are other very many factors that led to all this surge. As I said, gold is seen as a safe haven. Okay, so when people don't want to hold their money in currency, they hedge it with gold. Now, in a few days, we have seen this. This is quite a drop. And then this candle right here. And then we have this. So, this spells trouble. I'll break it down for you in a few. But this is trouble. Let's go back to the monthly time frame. Now, as you can see on my charts, I'm not using any indicators or anything. What I do is purely price action and fundamental analysis, multi-time frame analysis, all that, and we get to know where we are. So there has been all this move up. Okay. Now, in every big move, you need a consolidation. But since there's so much demand for gold, the consolidations are not going to be that much. So all that spells out is you bring out your Fib retracement. Very good. Now this is a Fibonacci tool. We'll make a video about Fibonacci. Now with this, it measures the retracement that you would be expecting. Now for me, the retracement that works the best is the 0.5% retracement. That is where all the magic happens. And that's where we're about to drop by. As you can see, we're almost nearing this 0.5 fib retracement level. And what that will spell out is, if it retraces back to that level and it breaks this level right here, we might be in for trouble. It will retrace all the way back to the 0 level. But if it comes here and shoots up, we can expect that a move up. If it comes and we get to see a bullish engulfing candle right here, you can expect, with a bullish engulfing candle, you can expect gold to rally all the way up here. This is the 100 retracement, and also all the way here, because it's strong move up, meaning that the next level for gold should be about 3,600 an ounce. Now, why is gold retracing? We'll come back to DXY. Now, DXY for some time has been dropping. See one engulfing candle, the second one, the third one. Yeah, sorry for that. Now we have morning star candle pattern that formed right here. This is on the big monthly multi-time frame. Now what this did, it created this move down. Okay, so the dollar has been losing value against, with the euro, USD, GBP, USD, gold, anything that's hedged or it's paired against gold has been losing value whenever you get to see these very huge candles shooting down. Now, DXY has been in a range for a very long time. This range started around 2023 January, and this range has been there until right about now, and this is when you can see these very drastic moves here. I'm trying to give you a bigger picture of DXY and what has been happening. Okay. Now, DXY formed a double bottom right here, and this caused this very huge move upwards. After this very huge move, it came and it broke this minor level here. This is the 90 level. And what did it do? Stagnated, consolidated around this level because it had made this very huge move upwards. This was the consolidation. And then we had another drastic move up. Shut up. Hence, another consolidation. So right now, we are about to get out of this consolidation. We have been in, as I said, 2023. It's now 2025. It's been some time, yeah? So, we are supposed to get out of this nasty range, but there are certain qualities that a good trade needs to have so that we can look at it in a long-term perspective. As you can see, it's a lower high, lower high, lower high, lower high, lower low. So yeah, it's in a downward trajectory, if you'd love to say that. But now there's this level right here that has caused the falling of gold the falling of the DXY to slow down, and well, other factors as Trump, slowing down on his trade wars with China. The rise of the US 10-year yield. Yeah, the 10-year yield actually does have an effect on the DXY. Let me show you right now. So whenever the 10-year yield rises, the bond, of course, bonds it's a way that the government finances its operations, where the government borrows money and it sells bonds. So what happens is, whenever the bond yields rises, that means that people are more interested in investing in the US. So what they normally do is they turn most of their money. Well, you'll only invest if you're using the US dollar. They'll turn all the currencies they have to the USD. That should bring the value of US dollar up, because there's so much demand for the US dollar. It's basic economics 101. Okay? So as you can see, the 10-year yield has been shooting up. So there's more demand for the dollar. Well, I bet your local forex guru doesn't fucking know that. Sorry. So, well, we've been in this nasty range for some time. we've come and we've slowed down right about here. Most of you might wonder, what does this line represent? Why, you know, why does it have such an impact? As you can see, it was support here, resistance, support, support, support. You know, pretty much holding water the line. But I want to zoom out and show you what's up with this level. Now, so much has been happening. Let me zoom out. Okay, good. Now, I normally have these drawings you see on my chart. I normally have lines. I don't use those fancy tools that they sell you for a whole lot of money, and they actually don't do shit. And you only use basic stuff, and this is what, investment bankers you get to use. They use very basic stuff, very free stuff that you take for granted, but you can't be blamed if you don't know how to use them. You don't know how to use them. Now, this is a very crucial level, as you can see. We won't go as far as 2003. Even that is good. So in 1999, you can see that level held. 03, that level held. 2015, 16, 17, this is a level that, it's respected over time, yeah? 2020, 23, 25. Now, when all that happens, when we shut down from here, from this level, shut down all the way here, what happened? It came down, it pierced, and it bounced back up. You can see it's quite the reaction we have here. It didn't just keep going, it respected this level. So, my expectations are, with this morning star that is about to be formed right here, because this is what will be forming. This week is about to be over. It's only going to take 12 hours. If we get a bullish engulfing candle right here next week, then DXY, or the value of gold, is going to shoot up all the way to the 104 level. Yeah, it's going to shoot up all the way to the 104 level. Now, since this is a major level, yeah, some serious moves have happened from this level. We I might buy gold, or no, sorry, I might trade this move. So this is quite the move, yeah? So you can expect this because what is forming here might be a head and shoulder. Yeah, head and shoulder, which is going to create this move as we need to come back to this level right here. We need to test this 104 level. So after we've retested this 104 level, now if we break this level, this is another whole story. This is another whole ball game because now the dollar is going to, so to say, to the moon, right? So right now, people are getting to see that their profits are dwindling. They are buying gold and it's not moving up. I think it's just wants to keep going down. Yeah. They buy down and it disappoints them. Now, I get all that frustration and whatnot. The reason for that is because gold has been in an uptrend. No, everyone has just been pumping money on gold. It's just buying, 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 buying. You're hedging against the dollar. But now Trump is easing on his stance. Trump is softening up. And he's even calling China to the table to discuss what's up. Gold slips more than 1% as China considers US tariff exemption. Gold futures fall but remain elevated on safe haven demand. So there's all that, but